Hello everyone, my name is Gev. I hope you're having a great day. It's Wednesday, May 20th, so let's talk capital. Alright guys, so a couple nights ago I was hanging out with one of my close friends and we got to talking about stocks and something interesting came up is he brought up the fact that most stocks are trending upwards, which is positive news for the S&P 500, positive news for the stocks and the economy, and the rest of the world is pretty much just screaming a doomsday scenario. So I got thinking, let's check them out, and so we did. So basically, for the most part, he's right. But here's the thing: so we're hitting a crucial moment for the markets here, guys. As I'm going to show you right now, I'm going to run through about 10, 15 of the most important stocks in the market, in my opinion, household names, household favors. These are companies that most of us know about. So I'm going to run through them and do quick TA on where they sit and where they're going. So before we start all of that real quick, let's look at the S&P 500 on a daily. We are damn near touching the 200 moving average on a daily. As we sit right now, we're about 20 points. As we sit right now, we're about 32 points shy, but for the high of the day, we were about 25 points shy of the moving 200 average on the daily. What does this mean? This means we're approaching heavy resistance. This means this is a make or break moment for the markets, right? If we can get above this moving average, close and confirm above on a daily, even 3-day, weekly, making it more powerful, then that means we have further upside action, probably up to 3,300 for the short term to see what happens there. If we reject this level, okay, we fall back down to first our 50 moving average and then to our 11-year trend line. All right. So now, how are the stocks affecting this move? So let's run through it. So first, let's look at Facebook. Facebook staging a massive breakout today, simply based on the news that they're opening up a marketplace where people can buy and sell Amazon style. Like you can third party items like Amazon, you can go on there and sell stuff on Amazon and other people will buy it. Facebook is looking to do the same exact thing with its services on Facebook and Instagram. So that sent the stock soaring, which is understandable. You know, when you announce something like that and you have a headline right here, Facebook says whatever Amazon does, Facebook can do it better, right? So when we have headlines like this, it's obvious why the market pops up like this, right? So Facebook being the outlier, I was thinking about making this video yesterday, and I was looking at this candle formation, which you guys are going to get a trend of. It's a pattern behavior for all the stocks right now. Candlestick formation, I hope you guys already know what I'm about to say. We've been talking about this formation on many different markets coming up recently, and basically what we have is a doji harami pattern right here, right? With the previous 2 week candles, we have a doji harami. Now, as we sat yesterday, this market looked like it did not want to get above the wick, right? With 214 being here, we closed right around the wick. But as today, we popped up and broke that high. Now it's about, can we sustain it? If we cannot sustain this breakout, this is a false breakout and it will cause Facebook to crash. All right. So now it's about, can we sustain the breakout? All right. But one thing that I want you guys to get the pattern of is this harami. So this was Facebook. Amazon, as we've been talking about, Amazon and Netflix are outliers. They're performing magnificently, constantly going with the higher highs and higher highs and higher low pattern, meaning that it is pushing higher into the price ranges, moving further to the upside, right? So Amazon outlier, Apple though, look at that harami pattern, right? Doji harami pattern again. We're yet to get above the wick. This is not like Facebook, where Facebook broke out. So Apple is still within this downtrend, right? If we do not break this high over here at 325 bucks, that means we've double topped and we're ready for a move down. The harami pattern, any variation, you have a doji harami, you have a spinning top harami, or you have just a plain harami, any variation of this pattern is a reversal pattern until it is invalidated. And an invalidation is close above the trading range, which is the wick, right? So as of right now, we're still bearish here. Netflix, just like Amazon, an outlier, breaking out due to the demand that it's seeing during the COVID crisis, right? Google, Harami pattern still has not broken out, and it's at a major gap, right? It's using this gap right here as a resistance. So until we get above the gap is resistance, pretty much setting in a lower high and continuing our move downwards, right? Real quick, jump back to Apple. Okay, so Apple's already trying to close above the gap here, and notice how the Harami pattern happened at the gap, right? Resistance. Until we get above, this is resistance. Microsoft, Harami pattern, has not gone above. Good news for Microsoft is we've closed above the gap now on the weekly. So it's looking a little bit more bullish, but we do have a reversal pattern at the top. Okay, Tesla, Harami pattern, yet to get above. The not only the inverse hammer, but the Harami, or just this entire range, has yet to get above and hold this $800 range solidly. All right, so we're looking at a Harami pattern there too. Disney's looking very bullish now. All right, Disney weekly broken gapped. All right, so when you gap, just like how when you gap down, it's resistance. When you gap up hard above a resistance level, that is very bullish. So when we gap up above the 200 moving average, that's very bullish. That means we do have upside on this guy. We can go all the way up to a 130, maybe even 140, right? Get to this gap and see how we react to the gap. So Disney's looking a little bit more bullish. IBM not so much. IBM is still looking bearish, still below its 200 moving average and hitting very hard resistance right now. And we're setting lower lows. So we have a low here, a low here, a low here, right? So it's highly possible that we trend back down and set a lower low here, or we just range here, all right? Intel Corp just hit the resistance level, the gap, right? So until we close above the gap, this is still bearish. We're still looking possibly for a move down depending on how the weekly candle closes with little less than 2 days left. Berkshire Hathaway, which is Warren Buffett's company, is trending below the 200 week moving average. Very bearish sign. As you guys see, it has not done this in years. In almost 10 years, it has not done this, right? But as you guys can see, it is possible for a rescue effort to take place here, for it to close above. You just got to see how the market develops in the coming weeks. But again, one other thing to take into consideration here is this. Warren Buffett is by far the greatest trader of all time. All right, and Warren Buffett has slowly and quietly been exiting most of his positions, long-term positions, which is scary. He sold all of his holdings in Goldman Sachs. He sold all of his holdings in airline companies. He sold his holdings in a couple other companies too. He's dumping his holdings. That is not a good sign for the market, man. This guy knows better than anybody what's going on in the world. Okay, and his track record proves that. It's not just me blowing up a bubble saying Berkshire Hathaway, Warren Buffett are the greatest people in the world. No, it's just the data proves it. And when he's getting out of these markets, for instance, let me put it to you guys this way. Warren Buffett bought $950 million worth of Amazon stocks at $1,770. Okay, roughly speaking. All right. At the time, the market was trending down, and most people thought, "Wow, what a stupid move! Why would you buy this at damn near the all-time high?" Right? Well, we just looked at Amazon. Right? It's at $2,400, almost $2,500 today. Okay, so when most people were saying Warren Buffett's an idiot for doing what he did, well, guess what? He's up close to $800 on his position per share. All right, we need to understand that this man knows what he's doing. So when he's exiting his major positions, I'm gonna take notice. I'm gonna take notice of that and understand that he knows something that we don't. All right. So Berkshire Hathaway trending down, Boeing just an absolute shit show, just completely trending down. This thing has so many gaps that need to be filled and are going to be used as a resistance that there's just no hope. Even if this thing pops up, we're first looking at $157 level. Secondly, we're looking at $180 level. And if by some measure of luck that all breaks, we're looking at the $240 to $250 level. And this thing has a long way to go until it's bullish. And realistically, we can even look at this downtrend here, which would coincide perfectly if you were to do some trending up, down, and we hit it at about $200 like that. All right, so this guy, no hope in my case, in my book. Ford trending lower, managed to set a higher low, what it seems like. So the next move here is a pushback up to 750, up to maybe even 880 range, somewhere around there. We do have a couple gaps to deal with. here. Sorry about that. Let's get that off the screen. We got a couple gaps to deal with here. Got a small gap here. We got a nice gap here at about $8, and the other one is at about 650. So those are the resistance levels that it's got to deal with. GM not looking any better than Ford, although it did pop up this week so far, so it's nice. Major resistance at $28 and $28 major resistance, and we're almost approaching that, which would even coincide perfectly with this trading range right here. So this will support that launched us up here. We broke under. This will now be resistance and push us down. So GM not looking good. McDonald's is looking better than the other night when me and my friend looked at this. Using the 200 week as support is always a good sign. We could have a move up here. This is a very weird chart formation going on here. I mean, it is holding it as support. It has popped through before one time like this too, and then rallied afterwards. So we just have to see what happens. Although, hard to tell, honestly. To me, it doesn't even make sense why McDonald's crashed during the COVID crisis. I mean, I get people aren't showing up, but if any restaurant chain is going to do good during any crisis, it's McDonald's, right? I mean, it's safe to assume that McDonald's is almost untouchable. And real quick, just notice this. So I'm sure everybody saw the top here at $221 and saw this and they're like, oh, well, that's great. It reset. Time to get in cheaper and buy the dip, right? Everybody bought the dip. We rode up and look what pattern sent us crashing down, guys. I mean, there's a reason why we do this, and there's a reason why we do this the way we do it. Okay, this is years of information that I'm feeding to you guys that I've learned through reading books and studying this. All right, Harami pattern. Doji Harami sent the market crashing. How many percent here? Now, how do you play the pattern? A 42% crash, right? Right? I mean, the pattern speaks for itself. All right. Coke, not looking good. Coke is just looking terrible. Coca-Cola under the 200 moving average, rejecting it, probably looking to move back down to the bottom, maybe do a double bottom formation. 3M, producer of the masks, is in a beautiful downtrend. Down channel, actually. We can do this and open the sucker up like that. We had a false break. We're holding. We're going to push up to the median line now and then either break up or break down and come back down here to the double bottom formation possibly, right? JP Morgan Chase, and this is where it gets interesting. So the financial sector, JP Morgan, Bank of America, right? Two of the biggest banks in America, JP Morgan being one of the biggest banks in the world. These are the debt suppliers to all the companies we just went through, right? Both these companies are not doing good. They simply put, they're just not doing good. Rejecting 200 moving average, right? Daily is not looking any better. Although we do have a nice, what it looks like double bottom formation, so we could see a push higher, maybe to $97. Ultimately, $100 would be massive psychological resistance for this guy. And the weekly moving average is just about at $100, right? So we could push up and get a little kiss of death and push back down. That's JP Morgan, right? Bank of America looking almost the same, except massive gap that it's dealing with and got rejected, right? Got rejected, moved back down. Now we have to see where we go with this guy. Weekly 200 moving average is sitting at about $27. So massive overhead resistance. Okay, and these are the bigger names in the business, the JP Morgan and the Bank of America. The debt suppliers of America are in hard times, guys. This is not good. Berkshire Hathaway got rid of all of its airline holdings, right? Why? Because it knows airline companies are in trouble for the next 12 months to come. That means their stock is going to tank. That means they got to lay off people. That means they got to borrow money. They got to borrow money from the banks. The banks are not doing well, okay? And for the majority of the financial industry, the stocks, the companies, the majority aren't doing well. You have the outliers, the Amazons and the Netflixes doing all right. They're doing good. Not all right, they're doing good, right? But the 1% can hold up the 99% of the stock market, and that's what we need to realize. So Now, with all that being said, what I'm telling you guys is this market is a ticking time bomb. When it breaks in either direction, if it manages to break above all these Harami patterns and continue to move, it's going to be an accelerated move to the upside. We've now invalidated all downwards action. So the only way to move is upwards if we invalidate the Harami pattern. If we do not invalidate the Harami pattern, that means the downward trend is still intact and we push down with not solid momentum. We're going to push down in a nice way on all of these guys, bringing the S&P 500 down with it, all right? Now, which way are we going to break is the ultimate question, right? We have a mixed market right now. We could honestly break in both directions. We could break up, we could break down. It's a very mixed market right now. All right. And news is huge right now, right? So 2 days ago, they came out and said the vaccine's almost ready. Market rallied. The next day, they said, oh, not so fast. It's not as close as we thought. And we got this candle yesterday, right? And then today, the market's reacting to, let me look at the news actually. I haven't looked at the news for the majority of today. Majority is reacting to a bunch of people in the financial industry changing their position to their feelings on negative rates. So it's looking like maybe people are okay with negative rates, right? So negative rates mean more easily accessible money, which means higher inflated asset prices, which means market goes up. So that's possibly why we're popping up. Also, I've been telling you guys consistently that the 3,000 level going hand in hand with the 200 daily moving average is going to be a level that the S&P 500 wants to see before we see a reversal or a massive breakout. And that's exactly what we're doing today, guys. So I'm going to go ahead and monitor how these stocks, I've saved them. I'm going to monitor them, how they perform over the next 2 weeks. Is going to be a massive indication of how the market performs. So I'll keep you guys updated on that. And again, as always, thank you for watching. Please like and subscribe. Always helps the channel. And until the next video, take care, guys. I'll see you then.